Hey, here's our chapter about limited liability companies, limited partnerships, and limited liability partnerships. First of all, limited liability companies are a relatively new type of business association. They were only invented in 1977. It was in Wyoming, and they were trying to think in Wyoming about what would be the most perfect type of business association where management was flexible and tax treatment was flexible and owners had limited liability, and in fact came up with the limited liability company. And soon thereafter, the rest of the states all joined in, and now every state has a type of limited liability company. Well, the advantages of a limited liability company are, first of all, the owners, who are called members. Owners of limited liability companies are called members. The owners have limited liability. Only the amount that the owners invest can they be held liable for. Another advantage is that the management of the company can be very flexible. If you wish to hire a manager to manage a limited liability company, you can do so. If the owners or members themselves wish to manage the limited liability company, they can do so. That's called manager managed or member managed LLCs. One of the things that is great about a limited liability company is that you can decide whether your company is going to have its profits taxed at the entity level, so the LLC pays its own taxes and files its own return, or whether the profits or losses flow directly through to the tax return of the owners or members. That's a huge flexibility that other types of business associations simply don't have. Now, the most important document in a limited liability company is the operating agreement. Pursuant to the terms of the operating agreement, you can find out how the LLC will be managed, member or manager managed, how the profits will be divided, how membership interest can be transferred, whether an LLC will be dissolved upon the death of a member, all of these things. So the important agreement is called the operating agreement. Let's talk for a moment about limited liability partnerships. For our purposes, what you need to know about limited liability partnerships is that this is a type of business association that seems to attract groups of professionals like veterinarians, accountants, doctors, lawyers, architects, and so on. Now, those professionals can have other types of business associations, but limited liability partnerships uh, seem to be designed for those professionals. Note again that a professional, like a doctor, like a lawyer, like a veterinarian, can never use the type of business association that he or she is in to shield him or her from that person's own professional liability. Okay, finally, limited partnerships. The concept of limited partnerships goes way back in Oldie English history. Uh, there are two types of partners in a limited partnership. First of all, there's the limited partner, and the limited partner will enjoy complete limited liability. Only what he or she invests is at stake. There has to be at least one general partner who has complete liability. However, the situation you don't want to get in is to be a limited partner, an investor, who suddenly starts to try to manage the company. Because by law, someone who's managing the company is a general partner. So you think you're a limited partner because you try to get involved into management, you suddenly morph into a general partner, and suddenly you've got unlimited liability rather than limited liability. Okay, that's it for this chapter.